Welcome to the Rich Dad Stockcast. I'm Andy Tanner. I'm normally not the host, but I am today because Greg Author is our normal host, is in Europe, and so he's away on business doing some things for the Rich Dad Company. And so I said, well, maybe I'll take a shot at guest hosting, and I'll bring in the people that are way smarter than me, which isn't an exclusive club. And so today I've got one of our most valuable instructors at the Cashflow Academy. He actually runs our weekly mentor club, which I can tell you a little bit about. I have the handsome Noah Davidson here with us. Noah Davidson, welcome to your first time on the Rich Dad Stockcast.
Well, I feel so honored to be here. Plus, you called me handsome, so you know what? I'll take it. I'll take whatever I can get.
Noah and I have been friends for a long time. We're going to have you introduce yourself. However, I'm going to take a moment and comment on a gift we have for those that would like to receive it. We have Zero to Cash Flow, and this class is the introductory class that I love to share, where people say, hey, I'd like to make money every month with stocks. I'd like to have a monthly income, spendable cash, not 401k money where I pack it away and I got a long white beard and hopefully something's there. This is spendable cash within 30 days, right? Your first month. And we call this click and get paid. How do you click a mouse and get paid and have just insane probabilities of success and how to manage risk? And so if a person would like to have a new income stream in their life and go from zero income from paper assets to having a consistent income, take the Zero to Cash Flow course and see what it's all about. It's probably 90 minutes, a couple hours is all, and you can get introduced to that. So Zero to Cash Flow. Now, Noah Davidson, we have known each other for a long time, man. And
it sounds like we're so old. Come on.
Yeah, I know. I'll tell you, my team at the Cashflow Academy, we've been together. It's just such a wonderful family we have. We've been together so long. And it's like a team that, the dynasty just keeps going year after year. It's a lot of fun. Give us a little bit of your background, Noah. You and I started off very similarly in that we really weren't looking to become stock investors. We were salesmen. And we had different softwares. I was a pretty good salesman when I was first married back 1,000 years ago. And I was selling this trading software. I was like, man, I had to use this. And you had a similar background. So tell us a little bit about your background and who you are.
I started out back during the big .com boom and got all excited about the financial markets, got all excited about technology, got all excited about, just the advent of the internet. And so I was all in. And then I wound up getting this job selling software. That was kind of like the Rolls Royce of trading software back in the day. Very, very technically oriented.
Yeah.
For the technical analysts. And this was software made by engineering types with big brains for engineering types with big brains. And I learned a few things about how they think and how they approach the markets very technically. And so I started my journey just by skinning my knee and not knowing how to do any of it. And just my enthusiasm got a little bit ahead of my education. And then after struggling, kind of going boom, bust, I got some education and spent some time, taking courses, working with mentors, rubbing shoulders with people that have much bigger brains than I do. And that helped me learn how to do things a little bit more intelligently.
You mentioned that it was interesting that you're skinning your knee by using the software. And then you said, well, I guess I ought to get educated. And I have found that to be true 1,000 times. I will see people, the crowd, I know the software you're talking about, and the software I sold is, it's obsolete. It's like WordPerfect or Netscape. It doesn't even exist anymore. The software you sold still exists. Yeah. And what I think is funny about that crowd is that they think the way to do it is with machinery rather than with the brain. And I will tell you, no matter how much AI we're going to develop and no matter how much that, there's no substitute for financial education. Imagine having a surgery and the doctor says, well, I didn't really go to med school because we have machinery now.
Yeah.
We're not there yet, man. We're not there yet.
And it's that search for the holy grail of magical trading systems that can
no work.
direction.
No
Yeah,
work.
no work.
Yeah.
Well,
All
no, the funny
money,
thing
no
is
work.
they put all kinds of work into it, but just chasing the new mousetrap. They want something bigger, better, faster to give them better buy and
Yeah.
sell signals. And over time, what I learned, Andy, is that there's different ways of thinking about the market. We can think about the markets like high probability cash flow, where we
That's
don't
me.
pick direction that much. We can think
Yeah.
about the markets just when it comes to trends and finding stocks that are going up or going down, and we can make money there too. But it's kind of having a good, healthy temperament and having
Yep.
a disciplined approach to the market where we have rules that so we don't let our emotions get away with us or the AI run crazy.
Awesome. Let's I thought it'd be great to do a market update and talk a little bit about where things are today. We've had I'm wrong so much, and it's nice because the way the rules set up is you're allowed to be wrong. You don't have to be right to still make money. In fact, I've had some of the best years ever. It just hasn't gone the way I thought. And it's funny because when people like it every January, Noah, I get asked on podcasts and I get asked to speak or whatever, and they always want to know my predictions. And I always say, I have no idea. I think it's doing this, but if it doesn't, I'll do this. And as a trade adjuster, that's kind of your talent. You say, I don't know where it's going either, but if it does this, I have a plan. If it does this, I have a plan. And if you have a plan for up and you have a plan for down, you have a plan for sideways, you don't know which one is going to go, but you do have a plan. So let's talk a little bit about, I've been wrong, the current state of the market, where I'm blown away that we're at new highs in the market or bouncing off them. Pretty much new highs. If you'd have told me we were going to have the biggest interest rate hike in the shortest amount of time in the history of the Fed, and that the market would just blow through that and take that headwind head on and go up, you would have knocked me over with a feather. With interest rates as high as they are, generally that strengthens a dollar and weakens gold. Gold is higher than it's ever been. I was looking at all the gold I have, kind of adding it up, and I have a spreadsheet that my wife and I look at every week. And I just put the price of gold in there every week just for fun to see what it is. I was like, holy moly, there's a lot of money that was made right there in gold. And so, did I make the money? Yeah. Do I have the gold now? I would have said, oh, my gold's probably going to lose some money for a while. Well, I was wrong. It made some money. I think the stocks are probably going to struggle with a headwind for a while. That would have been my prediction. I don't care because it's about cash flow, but the net worth is as high as it's ever been, in those equity markets. So what do you see now that the Fed is saying, hey, we think, see, I was so wrong. I said, you have interest rates hike, that should make the market go down. Well, now that we're going to freeze them, it looks like, what's your thoughts on the market today? Where do you think it's going?
Well, interesting question. With rates, the kind of the point and the purpose of raising rates is to bring asset prices down and prices down in general.
Yeah.
And so the fact, we've been on that path for about a year now, where they've been raising interest rates, kind of quickly, getting them up at these high levels. I think that the general idea is they kind of keep them paused here for a while. On average, it takes about 18 months to start to really affect the economy, kind of at the broad spectrum of what the economy is. And then the markets more specifically, they're very much an emotionally wired instrument. They tell us about what people are feeling more so than what they're thinking. And so it can be, the two emotions that we always think about are fear and greed. And right now the market's just showing the first signs of weakness for the year. It's kind of stalled out just a little bit. But I wouldn't be surprised to see it go higher before we see a deeper correction. And market correction, a minor corrections like 5%, a little bit more significant corrections about 10%. That's the most typical correction, about 10%. And then anything beyond 10% starts putting people, kind of into defensive mode,
into bearish mode, bear market mode.
And so if we were to see that, that creates fear. It creates inventory. So right now it might be profit taking, a little bit of pullback. Otherwise, it's still a very bullish overall trend. And from a technical perspective, the slowdown just makes me wonder if it's going to turn and do another leg down. but I still think we're in buy the dip territory on average until the market shows me otherwise. This is something I've learned over the years, Andy, is I also am lousy at predicting which way the market goes. And you don't have to, I mean, I used to think I could just be a better technician, a better technical analyst, and I could get it right, more often. And I'm good. I'm a good technical analyst, but your ability to forecast the market's like a week, 2 weeks, and your probability is still like 60%, maybe 70% when you're firing on all cylinders. But what it is I've learned over the years to trade what I see on the charts, not what I think in my head, because my own conformational bias, my own belief system starts to affect the decisions you make. And I want to be unemotional, unattached, systematic, and rule-based about how I see the markets. And so prediction, I don't think prediction is the right word. I think anticipation is the right word. So I have a plan. If the market sells a little more and we see a deeper correction, I got a plan for that. There's going to be opportunities to protect the assets I do have. There's going to be the ability to buy stuff, on sale or on discount. And then, every 10 years or so, the market will see a bigger correction. And we're a little overdue for a big correction.
Yeah, I hope so.
Yeah, well, it would be nice if you could get a big correction just for the opportunities to buy stuff.
I would love another COVID, not for like the disease. I wouldn't want anyone to be hurt or ill. What I mean is I'd like another market correction that deep, because I love a sale, and we just haven't had a sale forever. So I cheer for the market to die. It's so strange, because when I look at the market today, I feel even more bearish concerning than I ever have. But I'm a perma bear. And the reason I've been a
bear since like
well, the reason I'm yes and no. I'm talking on both sides of my mouth. I know. On the one hand, I'm a perma bear in that I think there'll be a big one that is just devastating because of our fiscal irresponsibility in the United States and because of our monetary policy in the United States. I think this thing's going to pop, and when it does, it's going to be glorious, because the opportunity to make money on the way down is going to be unbelievable. And then the opportunity to buy assets at the cheapest prices when everyone's panicking is going to be incredible. So I root for that. I don't know when it's going to happen, but I also am a perma bull in that I'm like Warren Buffett. I believe in American business. I think it will recover after a crash. I don't think it'll disintegrate and stay there, and we'll all, it'll be awful for the next generation. And I think people want food, clothing, shelter, medicine, housing. And I think as long as we want to eat and live and be healthy and have shelter and clothes, there's going to be people that sell that stuff to us. And as long as there are people that sell that stuff to us, we want to be producers, and stocks is a great way to do that. Let's take a break. And when we come back, we'll talk more granularly about the Fed and what they're doing in terms of freezing rates. And we'll talk a little bit more about what those plans might be, up, down, or sideways. We'll talk about what we do if it goes up, what we do if it goes down, and what we do if it goes sideways. Because for me, it's going to be the same thing in all three. It doesn't matter to me.
Doesn't matter. Yep.
We'll come back from break in just a bit.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning, as well as it's really solidifying in my mind. And like, they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
We are back with the illustrious Noah Davidson, ladies and gentlemen. It's so fun to be with you, Noah.
I'm illustrious now. That's awesome.
I will tell you, it's funny, because when you and I do a podcast on the Cashflow Academy show, there's a lot of editing that goes on because of Noah. So you've been very good. We haven't had to reel you in. Oh,
Not yet, anyway. Not yet, anyway.
Yeah,
Well,
I should say we're only halfway there, right? We're only halfway there.
Yeah.
So, people endlessly, I think the biggest challenge I have when I teach or do a podcast is to help people change their context and their way of thinking. The Bible has a great story of a parable of a sower who sowed seeds, and the seeds are always good. You crack open an apple, chances are there's an apple tree inside that apple ready to happen, and generations of apples. There's a billion apples in every apple seed ready to go. The seeds are always good. It's the ground that is just barren or weedy or hard, or the birds eat it, or it's shallow and can't take root. It's always the ground. And so the information on how to be successful is there. We know absolutely for sure how to create wealth. There's no mystery to figure out, well, how do I make money? We can tell people exactly, do this, do this, do this, do this, do this. Here's your seed, plant it, let it grow. But their ground is freaking barren. And the reason that is people don't learn it in school. School does not cultivate a wealthy growth mindset. School cultivates a scarcity, fear, job mindset. And so the bigger challenge is helping people decide to do that. For example, I'll say, hey, take this class called Zero to Cash Flow, and you can begin that process. And you would think that 100% of humanity would say, sign me up, where to go? For whatever reason, there's mental blocks where people, struggle with that.
Yeah,
So
well, I think part of that is the educational system conditions us to be afraid to make mistakes because
yeah,
they put big red marks on your paper when you make mistakes. And so
yeah.
adults on average, we just kind of get conditioned into, well, I don't want to make a mistake. I don't want to try anything new.
What if I fail?
What if I fail? Yeah.
It's not even about, and I found this, it's not even about losing money for people. For example, my first trade was, $160. It was the Panera Bread Company. The first time they went public, and then they went public again. But it was $16 a share, and I bought 10 shares. Whether it would have gone bankrupt, okay, I lose $160. Who cares? It's not the money, it's I was wrong. That's what kills people. People can't be wrong, right? They can't. Especially social media. Every commenter, I'm right, I'm right, I'm right, I'm right. So anyway, enough about context.
Right all the time, right?
I will just tell you, context is everything. That's something Robert taught me. Context is everything.
Well, it is
let's
everything.
Let's talk about this. Now let's get a little more granular. I think it's going to be, I'm fascinated to see what's going to happen. I think it's harder to predict inflation, deflation than it's ever been. I think the Fed is just really in a hard spot. I brought up some really fancy, ugly graphs in Mentor Club this last Monday. They're above a lot of people's pay grade, but I really am just curious to see what the market does. I have no idea. I really have, of all the time I've ever been this, I've never been less confident in making a call. I have no idea where it's going to go.
Well, again, I don't think I know either. I don't think the Fed knows. They do believe in a soft landing. So I'll give them that.
They hope so. Yeah,
they've got a bit of hubris. They think
you look at the Fed's liability side, and it doesn't look like it's a guaranteed soft landing to me. All right, we talked about up, down, and sideways. What's your thought if you start seeing this market slip now, and you say, okay, it could happen. To me, it doesn't seem likely. It seems that if they freeze rates or begin to even hint about pulling back on rates, man, that's bullish every time. But it was supposed to be bearish every time they raised them. I mean, I'm blown away that we're at new highs when we were at zero interest rate for pretty much 15 years or whatever it's been. And now they raised rates to 5 and we're bumping against all-time highs. Never would have seen it happen in my life. Happy it happened, made me richer, didn't affect my cash flow. I'm glad, but I'm blown away. So what's your thought? How are you going to behave if the market retraces? Let's say I wouldn't guess that would happen, but let's say it retraces. What are you going to do?
Usually the market slows down a bit before it retraces. So it'll give you some warning signs that say, hey, prices are stalling out. Right now, there's some small patterns that lead me to believe we might see a deeper correction. So typically what we'll do is I'll start reducing or tightening up stop losses on speculative positions. For our core cash flow positions, I'll make sure they're cash flowing, writing covered calls on them. And I start thinking a little bit about defense. and how to protect a portfolio. And so we do things in the mentor club, like we'll demonstrate how to hedge the portfolio. So we can insure the individual stocks, of course. We can use options to protect our assets, but we can also use options and futures contracts and things of that nature to take opposing positions in the market to neutralize our portfolio. So we can hedge a little bit. And so I don't, go all in and just hit the hedge button and go, flat neutral. I'll look at the portfolio, identify where the most risk is, and then either hedge a small amount of the portfolio or hedge the specific stocks that are more volatile.
I should mention this. You mentioned Mentor Club. People don't know what that is, so I'll explain what that is. So what happens is every Monday, I have the best life in the world. Every Monday, I wake up about the time the market is I get up a little bit before that, and then by the time the market's open, Noah and I, we get on a thing exactly like this, actually. And we spend about an hour and a half trading an account together, and we let people watch us do it every single week. And we've done this for 15 years or something like that, 13, 14, 15 years.
It's been a while.
So every Monday for 15 years. And it's funny because people say, are you kidding me? We could watch you guys trade every single week. No, you can't. You have to be in the Mentor Club to do it. And I don't let people in until, because you got to have a little bit of knowledge. So if you like, go take Zero to Cash Flow and you can learn more about what we do. And so what people don't realize is week to week, we look at what the market is. We make our decisions week to week. And we've done that for the last 15 years. And there's been periods of up, down, and sideways. So when you say in the Mentor Club, we do this and this, I should let people know that's what that is it's our weekly trading session that we let certain people in the club, certain people not in the club. So that's what the Mentor Club is. So apologize for not defining that or telling you that people wouldn't know what that was. So, so you talked about using options to hedge. Could you clarify that a little bit? I mean, I had Corey on in an episode and we talked a little bit about it. Could you talk more about, in the simplest terms possible, what is a hedge? I mean, well, maybe I'll start off this way. A hedge was a defense around the castles in Europe, right?
Right.
And when in World War II, they had to put spades, they call them rhino tanks. They had to weld spades to mow through these fortresses of a hedge. So that's where the word Shakespeare used it the first time as a way to refer to defense. I have a hedge to hedge and lurch is what he said, to defend and attack, to hedge and to lurch. And so we do the same thing. We hedge and lurch all the time. What do you mean by hedge? Explain to me why in this market you're always ready to hedge.
Yeah. So a simple way to think about it is they have options on stocks, which serve as insurance instruments. And it's just no different than insuring your car, against loss, or insuring, buying a home insurance policy. You can protect the asset, but it costs you a little bit of money. You got to buy a contract that has the terms and agreements that give you that protection. A simple hedge or a protection would be, let's say, imagine I owned a bunch of Microsoft and I was pretty bullish on it, but I was worried about the downside risk on the market. I could buy a protective put option, a contract, for as little time as I want or as much time as I want. Like I could go buy a 1 month contract, a 2 month contract,
for a week,
week contract, a year contract. The more time you purchase, just like buying your auto insurance, you might have a month to month policy or a quarterly policy or an annual policy. The annual policy costs more because it covers more time, right? So we can insure against loss.
So what you're telling me is, let's say Microsoft, I'm really bullish, I'm all excited, but I have an unknown. I don't know the earnings date, or I know the earnings date. I just don't know what the result will be. So I know, like, say on a Thursday, they're going to have a call. They're going to say, here's what we earned and here's our outlook. Those are usually the two things on the earnings call we worry about, right? Well, do we earn money or do we lose money? And what people do is they try to guess it, which is stupid. They try to guess it. So maybe what a person does is, look, I'm going to buy some insurance for that for a very short amount of time, and if it goes up, fantastic, wonderful. I bought some insurance. It took a little bit of my profit away when it went up, but I bought some insurance. But if it goes down, they'll pay you the difference of when it went down. You can take that money and still keep your stock so you don't lose anything. Is that close to what you're talking about?
different ways you can use the contract to protect you. One way is to actually exercise your right to sell the stock at the fixed price you chose.
Which
So that's
isn't
one.
anything. I don't want to get rid of my assets. That's
Yeah,
not
so
one
I
I've
want to
ever
keep the asset
chosen.
myself too. So what I would do is what
Yeah.
happens if the market drops, the price of that contract goes up. So you could
And they're
sell
liquid.
the contract and create a new cash flow, and that offsets any depreciation in the asset itself. And so, that's one of many different ways we can protect ourselves in the market. And,
I did
kind of
that.
the funny thing is,
I did that on ExxonMobil. I was watching ExxonMobil before COVID hit, and I wanted some more of it. And I was thinking, where's the best price? And I was looking at support and resistance, and I said 55 is really the floor of that thing most of the time. I think I'll buy at 55. So I buy at 55, picked up a few hundred more shares at 55. And it wasn't a huge trade. It was probably 25 grand, more in that stock. And then COVID hits, and no one's going to drive, fly, or have a train move, and oil's just not going to go up. And the stock, I thought, man, this is worth buying some insurance on. So I bought the right to sell at 55 if I wanted to. In other words, I bought at 55. I paid a small amount of money for my right to sell at 55. And I says, I can unload this. I paid someone to buy it from me at 55. It was my choice. If it had gone up, I said, great. That guy makes a little money, but I keep my stock and it goes up. Well, it went down to about $37. And at that point, that contract was worth the difference now. And so
Yeah.
I sold that contract. I received the difference. I kept my ExxonMobil. Today it's at $120 a share.
right.
And so my cost basis actually is no longer 55. My cost basis actually is at 37 because I got paid for that difference in that loss. I mean, it makes all the difference in the world. And why people, when maybe people are listening to this and this is just jargon, all this. Well, learn. Robert's really good about not using jargon because people don't understand it. I'm not as good at it as he is. But my approach is, if there's jargon and you say, "Oh, I don't understand this," learn.
Yes.
Oh, what did they say? Learn. And that's the big deal. So if it goes down, you're thinking you can, it's the same thing. You can buy some insurance. But I'll tell you what my plan is if the stock market goes down. What? And you've known me for long enough.
I could probably guess this.
Noah's known me long enough. Every time something goes down, what do I do?
Buy.
And how do I buy?
By
I don't
selling.
buy the puts.
You don't buy. You sell them. You sell
I
them.
sell the puts. I tell people, I go, I'll be the guy to buy that stock.
So yeah, to put that
me.
into perspective, Andy's playing the role of the insurance company, right?
Absolutely.
So,
Yeah.
and this is a
Geico.
really common technique. In fact, that's kind of your bread and butter. The premium.
It really is what I do. Yeah.
Yeah, collecting the premiums with consistency is how the insurance companies stay in business, right?
Not only did I buy puts when that fell, I sold them as well, much lower, so I could buy even more cheaper and get paid to do it.
Yep.
These are the things people can learn about, where when we sit here with our feet up on the desk saying, well, hell, I don't know what's going to happen, but I have a plan for it. If people could release themselves from having to predict the future and just say, look, I have a plan for it goes up. I have a plan for if it goes down, bang, bada bing, bada boom. That's the big deal. So we're talking about the market in terms of, we've talked about the Fed and freezing rates. That's generally bullish. That generally means we get a boost. It's not a guarantee. We talked about what we do if it went down. If it goes up, we're just going to take the money.
Yeah.
Let's talk about why it might go up. I think the headwind, if you're going to ask me, and I don't know this, but if you ask me why I think this has been bullish, I think it's AI. I think that we have a general sense that AI is going to make every business more profitable, almost no matter what the business is. And when you have a driver that's going to make business more efficient, more profitable, better products, better everything, you just have to be bullish. And I think it's the AI idea that has made that go. What do you think?
100% agree. And right now it's the AI race. This kind of reminds me a little bit of the late stage .com boom, where lots and lots of companies were participating in creating websites and .comming. but only a handful of them survived. And we know them all by, Google, Amazon, and some of these big companies that not only survived the first wave, they became the second wave. Right now, I think we're in the first wave of AI, and there's lots of companies participating and jockeying for position, and it's very bullish on average. We're seeing chip makers and hardware companies and software companies all very, very bullish. And so, on average, the market's bullish. The remainder of the sectors out there are primarily bullish. Just kind of the rising tide lifts all the boats in the harbor type situation. So we've been in pretty bullish, posture for quite some time. And at some point in time, there'll be a correction. But I still think that people are in the buy the dip mentality. We haven't had enough of a shock to the system to create more fear than there is greed about the AI, boom.
I think that people go about the AI boom the wrong way. Is what they're trying to do is guess what the next big AI thing will be, and it just is hard to do. It's like the FANG trade. Trying to pick that in 1993 would have been hard to do, right? Meaning the Facebook, Apple, Google, Netflix trade, the FANG trade. Well, there'll be a FANG trade for AI, and everyone's trying to figure out, how do I buy the AI? It's not that like that. It's like, just own business, because AI is going to help your business is a secondary. It's like Bitcoin. Okay. Number one, I own some Bitcoin. Great. So I own some Bitcoin, but I'm not nearly as excited about the Bitcoin as I am about this, because everyone that wants to buy Bitcoin needs this to trade, buy, sell, use it, transfer it, whatever. So I have three things here. I have Apple. So you got to buy my phone. I have Verizon I own Verizon and AT&T. So to use your phone, you got to have that. And I also own utilities that make electricity, which you absolutely have to use your Bitcoins. So I not only have the Bitcoin, but I have everything you have to have, whether it goes up or down. I don't care. This is a constant. The electricity is a constant. The AT&T network, the Verizon network. I don't own any T-Mobile, but which is the one I use actually myself. But it's crazy, Noah. Own assets. Up, down, sideways, get cash flow, goods and services, and it's a game. Use your options to protect yourself and to double your cash flow off your dividend. It's pretty simple. And then if you really want to get into the stuff, learn from Noah about directional trading. He's the technical analyst, much better than I am, and we teach it. We teach people how to do it. So good stuff.
We have a lot of fun doing it too, and we do a pretty good job of making it simple. It's
hey. I'm just glad every time I get on the tube with you, man, I thought we're going to get canceled this time. This will be it. Noah's going to say something, man. So that's why we keep it in the club, right? You got to be in the club.
I'm sure we could analyze the statistical probability of that, but
yeah, it's pretty high. Eventually it's going to happen. Eventually we'll be a crash and eventually be a cancellation. Both, but we don't know when it's going to happen, but both are going to happen.
Some people have filters. I don't seem to have one, and I just kind of say what pops into my head. So
boom. Noah, great to be with you. If you'd like to learn more about what we do, take this class. It's called Zero to Cash Flow. It's free. And it lets you dip your toe in just to see how do you click a mouse and get paid? How do you do that? Click, get paid. There's my advertisement for Zero to Cash Flow. Noah, I hope you come back sometime. It's been fun to play guest host and to talk to you a little bit about what we do, about where the market is. On the one side, you got the Fed manipulating stuff on the government side. Then you got the true entrepreneurs developing AI that's boosting it up and kind of holding it up there. And we'll see where it all winds up. But the answer is always the same. Buy assets. It's always the same. Buy assets and protect them. Buy assets and cash flow them. Buy assets and protect them. Buy assets, learn how to cash flow. It's the same thing. And it's just a little bit of education to get you there. So with that, we thank you for being with us, Noah, and we thank everyone for watching the Rich Dad Stockcast. And we'll see you guys next time.
Thanks, Andy.
This podcast is a presentation of Rich Dad Media Network.